Hey guys, how's it going? Lee here. It's been a while, I know, but today what we've had is Commonwealth Bank, Australia's largest bank, just come out with its full year annual report. During a time when things are a little bit unsettling and we might be in for another round of lockdowns, so this report is going to be rather interesting because it's going to give us some insights on what CBA is thinking and on the Australian market moving forward. So let's get into it. And so first of all, what this report outlines is that you should be smashing that like button right down below. Quickly, take a second or two to click it. And if you aren't subscribed, then make sure you do subscribe to this channel for some more finance content. But in all seriousness, if you haven't done so, click the like button because it does help out the channel quite a fair bit. Now at the moment, what is hitting headlines is that cash profits are down 11% to $7.3 billion, which to me is a lot less than what I thought it was going to be. And I imagine for APRA, a lot less than what they estimated it was going to be. Now, if you don't know what APRA is, it's basically the body that regulates all the financial services in Australia. But what we can see here in this report is that CBA has had strong performance just as a business in continuing to increase business and home lending. However, in contrast, it has been negatively impacted due to the increased loan impairment expenses due to the fact that loans are not being paid back. Now, if we have a look at who and where the deferrals are taking place, it seems like a large portion of them are taking place in New South Wales, who, may have over leveraged for many of the properties because it's such a super hot market where dingy looking places are going for millions of dollars. Now, in saying that, it doesn't seem too bad considering that only about 8% of all CBA accounts are asking for these deferral of payments. Especially when I've been reading headlines everywhere in Australia that would suggest that this percentage might be 20, 25, or even 30% of all CBA accounts or all homeowners. Now, having a look at their profits already, I kind of wanted to see where they were allocating money and where they were making cuts in specific areas of the business. And to me, interestingly and kind of not interestingly, because it makes sense, a huge portion of their money has gone towards IT. Given that a lot of things have been shifting online, so there's a lot more usage of their apps, their online banking, and a lot of things like documents, sending through approvals, and all of that is now being done online. So of course they're gonna need to bolster security around all of that and make sure that it's functioning and being well maintained. Now, it should be no surprise to anybody that all of this money being invested has kept Commonwealth Bank being the #1 online bank, depending on which survey you look at. But from my experience also having used many other banks, I really prefer CBA's app, online internet banking, and even CommSec, their trading platform. There's just something about it, it just functions really well, and sending and receiving money is so seamless. It just works really well. Now on this particular slide here, CBA's drawn comparisons between itself against its other peer competitors. And we can see in so many of the metrics, and of course this is biased because, well, they've made the report, but in terms of deposit taking, in terms of the amount of home loans, and also total return for shareholders, which is important because that's what, we're talking about on this channel all the time, investing in shares. It's so far ahead of its peers. Whilst most banks, even before the whole Rona situations, was in their 20s in terms of share price, CBA was floating near $80 with a very strong stream of dividends, which is about $4 to $5 per year, fully franked of course, in terms of dividend that people were receiving. Now, given this channel is about investing, is about stocks, is about business, we cannot ignore, absolutely cannot ignore the impact that CommSec and CommSec Pocket has had in the share trading space. Now, we all kind of know that CommSec Pocket has seen a great rise in popularity, and of course I've done a video on it already somewhere. I'll put a link to it below. And here on the slide, CBA has given us some numbers. So within its first year of launch, it's gained 100,000 customers with $177 million invested, which is basically saying that the average person has about $1,770 invested in CommSec Pocket, where the minimum investment amount is $50. Quite impressive. And of course, as you know, they have 7 themed ETFs that you can invest in, which makes it very simple and easy for anybody to get started. Now, the sheer amount of growth that CommSec Pocket has seen has been astounding, amazing. with that much money and that many customers invested into essentially what's like the equivalent of a raise, all done within the span of 1 year. Now, whilst all those numbers were great and amazing to read through and see, I actually wanted to know how much money they were making through their trading practices. And it's on this slide that I actually found out that through their trading business alone, we're looking at a revenue of $940 million. Yes, $940 million. Now, that amount is massive for any medium-sized company to be able to bring that revenue through. Sorry, medium-sized company in Australia. In America, that would be like a bit of a joke. But anyways, medium-sized company within Australia to bring that type of revenue in, and that's just a small amount for Commonwealth Bank in terms of revenue. Now, a lot of that money does come through commissions in trading, but it also includes the money that they make on international money transfers, which has been slowing down. But what they've actually seen is that the frequency of trading is a lot higher, which has been, well, overriding the lack of money transfers. Now, obviously, if you want to delve more into the report, you can read it within your own time. But it is a lengthy presentation. It has like about 100 and something slides. And if you read the actual report, it's like 300 something pages. So I'm not gonna fully go through it. What was interesting to me was that although there was a lot of fear around the low interest rates coming on in, all-time low interest rates, where we would have seen a lot of failures or lower revenue coming in through retail banking, home lending, all those types of things. But what we've actually seen is an increased uptake on home loans. And obviously this has been inflated and encouraged by the Australian stimulus package money, JobKeeper, all that type of stuff coming in. And obviously the builder's grant, we still got the first home owners grant, all this bonus money to incentivize many people to take on home loans at all-time low interest rates. And so although there is a squeeze for a lot of these banks in terms of upping their revenue when, interest margins are getting smaller and smaller and smaller, the frequency at the moment seems to be, for Commonwealth Bank anyways, making up for that difference. Now, another thing to note is that Commonwealth Bank has also started to divest a lot of its businesses, which is where it's gotten a lot of cash in this year. Also, it's removed such businesses as its life insurance, and essentially doing this has, one, decreased overhead in terms of cost, and two, also mitigated some of the risk and compliance that it had to abide by under the Australian regulations. Now, what's interesting for me in this report is that if it wasn't for the loan impairment expenses, then actually on a year-by-year basis, it would actually be ahead of 2019. Even though we've had the whole Rona situation, even though there's been a massive economic slowdown, if it wasn't for that impairment, Commonwealth Bank would actually be ahead. Very interesting to think about. So this increased frequency of people taking up home loans and some businesses doing rather well is actually making up for that gap that we thought was going to be there given the whole lockdown situation in Australia. So obviously, being within good financial standing, they're able to pay out a dividend of 98 cents, fully franked of course, and which also allows them to meet with the APRA guidelines of paying out dividends at a maximum of a 50% rate of their net profits, which most banks have been encouraged to abide by. Now, to close out, I'll be honest with you guys, I was expecting a lot worse from this full year report from Commonwealth Bank, given they are so largely exposed to the Australian housing market. And so, deferrals all over the place. That's what I was thinking. We heard from the CEO himself that things weren't going to look good. A drop in house prices as well in Sydney, but obviously it hasn't happened yet. Could still be coming along the way, but we haven't seen it yet. But yeah, so looks really good. They've given out a dividend. Everybody's happy so far. There is some drama about him getting a massive $500,000 pay rise. I'm not going to touch on that. I'm just not going to touch on that at all. But that's it for me, guys. Great to be back to be making a video. I'll catch you guys later. Leave me some comments down below. What emojis should we use this time? Some camera emojis, because I'm back on the camera. So put some camera emojis if you made it this far into the video. Apart from that, guys, I'll catch you guys later. Cheers.